You may have heard that the most common type of reverse mortgage, technically called the home equity conversion mortgage, is insured by the federal government. But what the heck does that even mean? I imagine many of you have entered into a federally insured loan before, such as a VA loan or a regular FHA mortgage. So the insurance must be the same for the federally insured reverse mortgage, right? Well, not quite. Compared to those other federally backed mortgages, the insurance you get with a reverse mortgage is actually way more valuable to you by far. And in today's video, we're going to break down that value and discuss what this insurance is all about. So settle in and let's get to it. Hey folks, welcome back to those who are already subscribers to the channel. And for those who may be first-time viewers, I am so happy you found us. My name is Taryn Proctor. I am the founder of Retirement Home Equity Advisors. We are a mortgage brokerage specializing exclusively in reverse mortgage financing. And if your goal is to find out what reverse mortgages are all about, you have certainly landed in the right spot. I make videos just like this every week to help educate folks like yourself about this product in an effort to help you determine if it may be a good fit for you or not. So if you find this video helpful, do me a huge favor and let me know by hitting that like button, and then head on over to our channel to subscribe. Our channel has many more videos that I think you'll find helpful as well. And don't forget to hit that notification bell when you subscribe so that you get notified when we have our new videos come out every week. Now that that's out of the way, we can get to the good stuff. Reverse mortgage insurance and what it entails. For starters, let's talk about why a reverse mortgage needs to be insured in the first place. When it comes to reverse mortgages, one of the main benefits it offers is it does not require you make principal and interest payments on the amount that you borrow. That means if you don't want, you never have to make another mortgage payment again for the rest of your time in the home, which could certainly mean for the rest of your life. Now, if you choose to not make any payments, the inevitable result of you not paying the principal balance nor the interest that you are incurring every month is your loan balance will begin to increase from the interest it is incurring every month. So over time, that balance will continue to go up month over month, year over year. So what happens if many years down the line, let's say your home loses value in a housing market crash, and now your reverse mortgage loan has grown to be more than what your home is actually worth? Well, this is the first and most important benefit of the reverse mortgage insurance. If you wind up owing more on the reverse mortgage loan than your home is worth, then the insurance you pay for upfront and throughout the loan will pay for whatever amount you are upside down. So let's break this down as an example. Let's say you take out a reverse mortgage and have the loan for the next 20 years. And at the end of the loan, your home loses a significant amount of value and is only worth $700,000. But your reverse mortgage loan balance at that time is $800,000. Of course, that means you owe $100,000 more than the home is worth. Well, in this instance, the insurance would pay that $100,000 shortage. This protects you and your heirs from ever incurring debt that the sale of the home cannot pay off. You do not get this benefit with a VA loan or a regular FHA mortgage. Now, the reverse mortgage insurance provides one last major benefit to you that no other mortgage can offer, which is a line of credit feature with terms that are guaranteed to you and cannot be canceled, frozen, or reduced as long as your loan is in good standing. Now let's break this down a bit in more detail. The line of credit option with a reverse mortgage is a feature that allows you to keep money from the loan in so that you may draw from it over time when it's needed. The line of credit acts similarly to a HELOC in the sense that you do not get charged interest on the money you leave in it. What is drastically different than a HELOC and much more beneficial with the reverse mortgage line of credit is that not only do you not get charged interest on the money in the line of credit, but that money you leave in there will also begin to grow. This feature is called a growth rate and provides that whatever money you leave in the line of credit will grow at the same rate that your loan balance is charged for interest plus 0.5%. Now, atop of all of these features, the federal backing or insurance guarantees these features of the loan to you. So again, unlike a HELOC, the lender cannot just decide one day to turn off the growth or freeze or reduce that line of credit. As long as your loan is in good standing, the federal insurance provides that line of credit always be accessible and will continue to grow. These guarantees are not available with any other loan out there and certainly provides for the peace of mind that many folks are looking for. Now, lastly, we've gone over the amazing benefits this insurance provides for reverse mortgage borrowers. But similar to other government-backed loans, this insurance does not come for free. There is a cost to the insurance, which is something that you will absolutely want to take into consideration. So there are two fees that the federal government charges for this insurance. The first is called the upfront mortgage insurance premium, and it acts like an additional closing cost to the loan. This fee is typically going to be the largest fee charged when entering into a reverse mortgage for the first time. And currently, that fee is going to be equal to 2% of whatever your home appraises for, as long as your home appraises for less than $1,089,300. If your home appraises for more than that amount, that 2% fee will only be calculated up to the $1,089,300. It's basically capped off. So if your home appraises for $100,000, that insurance premium up front will be $2,000. And with that said, I always like to point out that this cost is in line with what other government-backed mortgages cost. VA loans can actually incur a VA funding fee of up to 3.6% of the loan amount on 100% financing. And with regular FHA mortgages, that upfront insurance cost is, I believe, equal to 1.75% of the total loan amount. As well, important to mention that this fee, along with the rest of the reverse mortgage closing costs, are fees that can be rolled into your loan. And that's just to say that you wouldn't have to actually come to closing and pay for the closing costs out of your own pocket. Lastly, for this upfront amount, I had mentioned before that this fee is many times the largest fee charged when entering into a reverse mortgage for the first time. And the reason I use the verbiage for the first time is because you can, in fact, refinance a reverse mortgage. And when you do, it's important that you know that you won't be charged this 2% mortgage insurance fee every time you do a reverse mortgage. You will actually get credit for what you paid into that fee the previous time you did the reverse mortgage. And that's just to say that on a refinance of a reverse mortgage, that insurance cost is significantly less, and in many cases winds up being zero. Okay, now, if you remember, I mentioned that the federal government charges two fees for this insurance, the first being the closing cost portion. The second fee that is charged for this insurance is called the ongoing mortgage insurance premium. This acts like an additional interest rate on the loan. Regular FHA mortgages have this ongoing mortgage insurance premium as well, but VA loans actually don't. But on a reverse mortgage, that ongoing mortgage insurance premium is 0.5%. So that just gets charged to the outstanding loan balance throughout the life of the reverse mortgage loan. All right, and there you have it, folks. That concludes our video about the reverse mortgage insurance and what it does and how much it costs. I hope you found this information helpful. And again, if you did, please give the video a thumbs up and go check out the rest of the videos on my channel and subscribe. And if you have any questions about today's topic or about reverse mortgages in general, then please don't hesitate to give me a call anytime. You can reach me at 888-982-0475. I hope you all have a great rest of the week, and I'll see you next week.